Hello, everyone. So, how do we make money in stocks? Right? That's a big question. Stock market is going up. You want to make money too. You want to be part of the party. So, what do you do? How do you do it? Well, first of all, whatever it is that you're going to be buying, you need to understand what they do. Right? You need to understand the stocks. You need to understand the business. You need to understand the strategy. You need to understand the management. You need to understand what they plan to do. You need to understand how they make their product. Whoa, 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 hold on. Huh, that's too complicated. I know, I know. And that's the issue. It is complicated to find out exactly what this company does. Okay, well, you know what? Then let me focus. Let me buy a bunch of stock through a portfolio. As I've done before in a previous video, only 18% of the portfolio managers beat the S&P. So you got to do some work. Nothing comes with nothing. Right? You gotta make some efforts, right? So let's start making some efforts. Go and find out news. Look in the 10K on the SEC.gov. Look at the company. Understand what they do. If you never heard of the company, then therefore you don't know what the hell they're doing. Obviously, if you've seen a Tesla, you say, "Well, what's going on with Tesla?" Well, read about it, right? Read about it. Understand the business, right? You could read articles about it. You could look at the 10K. You could go on SEC.gov. You could do a bunch of things to find out exactly what the company does. And that's a great thing about it because plenty of information is available. But you got to make the effort, right? So once you've done that, you need to understand what's really going on with the company. What's the story? Is Nike a shoemaker or is it a marketing company? Is Tesla a auto manufacturer or a energy providing type of company or an AI type of company? Makes a big difference. Why? Because if the market looks at Tesla and say Tesla is a manufacturing or is an auto company, the P ratio is going to be much lower. They're going to value it a lot less than if they value it as some other type of company that's involved in AI, that's involved in artificial intelligence, that's involved with cars, that's involved with satellite, bunch of things. That implies valuation. That's what you need to realize. You need to realize that it's all about the valuation, what the market thinks about. Okay. So once you understand the story, like, look at Nike. What do they do? Well, they make shoes. That's what they do? Not really. They are an image maker. They are a marketing company. They're providing an image. Otherwise, you wouldn't be paying $120 for a pair of sneakers, right? So you want to understand what the company does. I know it's a lot of work, but do you want to make money or you want to other people make money? You need to understand what they do. Then, of course, you need to take a look at the financials. That you have to do. You have to look at the financials and you have to decide whether or not the company makes money. Again, that information is available on sec.gov. They have to provide you with financial. They have to tell you how much money they make, how long they've been making it. That information is available in the 10K or the 10Q. Once you look at the financial, take a look at the EBITDA, take a look at the operating income, take a look at sales. It's all in English, so it's easy to read, and see if it's going up or down. If it's going up and it's trending up, chances are it's a good company. If you understand what the company, chances are it's a good deal. Of course, don't put all your money at once, because believe it or not, we really don't know what drives stocks. So, no, yes, we do. What do you mean? Well, on television, we see it all the time. CNBC is propping the news about a company, right? They're seeing the news, and then next to it, they're showing the stock of the company. So they give you the impression that the two are connected. So the price movement, which is price risk, has nothing to do with the company, how much money they make, which is credit risk. So credit risk and price risk are together. Who says so? Who says so? I don't think so. Right? If it was that easy, everybody would be making money on stocks. So some people make money, some people lose money. So what you want to do is you want to look at the financials and make sure everything is up. And most importantly, you don't want to pay too high. How do you do that? Listen, you don't need $1,000,000, otherwise you wouldn't need to do investments. What you do is you invest a little bit at a time. $1,000 here, $500 there, dollar cost averaging. So you buy more shares when the stock goes down, and you buy less shares when the stock goes up. So you average out, and you invest constantly, all the time. Don't go to lunch, don't go to dinner, don't go on vacation. Buy stocks, buy stocks, buy stocks. Ultimately, if you look at the chart, stock chart, it goes all the way up all the time. The trick is you got to be careful. You got to make sure that during that period of time during which you have decided to invest, that it's going to go up. Yeah, if you're 102 years old, sure you made money in stocks, but you have to have started invested in 1900 until today. That's going to be difficult, right? So you need to make sure, more importantly, that you understand the risk that's involved. Try not to be too focused on the actual investing and making money part, and always trying to think about how to manage my downside. So how do you manage your downside? Well, besides understanding what you're buying, maybe you want to mix it up a little bit. Create some diversification, but only on items that you understand. Warren Buffett, he doesn't believe in diversification. He's got a diversification, and he's a billionaire. So what you want to do is basically put a bunch of stocks together. I didn't say 500, I'd say a couple that you understand, that you know, that you follow, that you understand, that you know, that you like, and you buy a little bit at a time, and it will grow slowly but surely. The earlier the start, the better off you're going to be. Of course, if you want to boost things up a little bit to make things more interesting, you could get involved in options. In that case, what you're doing is not only you must know when it's going to go up, because the option is only good for a certain amount of time, but you also need to know how high or how low it's going to be. But if you do it, if you're right, if it works, then a $1,500 investment could be worth $33,000, $30,000, $40,000 very quickly. But you got to know when it's going to go up, and you got to know by how much. That is not easy. Right now, you could buy long dated puts on the S&P 500 2 years from now. And if you think that the market is going to drop by 50%, you could bet on that. Of course, somebody is on the other end of the market saying, no, I don't believe so. So she or he are going to make money if you lose. But you have 2 years. And if you believe some of the hedge fund managers, such as Spitznagel, he likes long dated puts. In fact, that's where the real money is. That's where he made a boatload of money, 2,000, 4,000% during COVID, by buying long dated puts. Now, of course, you could be paying and nothing happens. But try to always make sure that you manage your downside, trying to protect what you have. Don't be so focused on the gain, because you could be gaining and then you could be losing. You need to manage your portfolio accordingly. Now, of course, you could say, well, I'm going to get somebody else to pay for it. Yeah, you could do that. The only thing is 18% of portfolio managers beat the market. How is that going to help you? All right. Now, of course, as your own portfolio managers, you don't have to have 50 stocks. You could have 4 stocks, 4 good stocks that you understand, that you like, that you follow, that you analyze. Analyze, that's a key word. Understand their story. And maybe over time, you will make money. There is no substitute for hard work. And if you hear a stock like Nvidia that's already up, and you say, hey, if it's making money, I want to make money too, be careful. You may be the sucker in the story. Don't be a sucker.